In this week's episode, we are going to look at a pretty interesting Japanese proverb that I came across and how it really relates a lot to retirement and just everything else that happens in life. So we're going to look at that this week. Let's roll.
Welcome to the Safe Money Retirement Show with your host, certified financial fiduciary, Tim Wood. Tim is a retirement and income planning expert, best-selling author of Safe Money Retirement, Your Game Plan for Success, member of the exclusive Ed Slott Master Elite IRA Advisor Group, and founder of SafeMoneyRetirement.com. Tim uses an education-first approach with clients nationwide to ensure they understand their choices in planning their own safe money retirement. Tim focuses on wealth management, retirement income, tax and long-term care planning, and asset protection and growth strategies. And now, from the Safe Money Retirement Studio in Johnson City, Tennessee, your host, Tim Wood.
Hello, this is Tim Wood, your host, welcoming you to the Safe Money Retirement Show. I'm a certified financial fiduciary, asset and retirement protection specialist, and your one-stop source for capital preservation and strategic income planning. I came across a really interesting Japanese proverb this last week that just really spoke to me and I thought would be something that would really be very relatable to everybody with everything crazy going on right now between, what's going on in the market, what's going on in Washington, what's going on everywhere with everything. This just really hit home. So that's what we're going to discuss today. But first, if you don't already have a copy of my book, Safe Money Retirement, Your Game Plan for Success, what are you waiting for? We will send you a copy absolutely free with no charge and no obligation so you can start planning your own retirement by knowing what's available out there. Just give us a call. It's toll free from anywhere in the United States, 1-800-913-SAFE. That's 800-913-7233, or just log on to our website at safemoneyretirement.com and request your free copy right now. So this Japanese proverb that I found, here is what it says. If you get on the wrong train, get off at the nearest station. The longer it takes you to get off, the more expensive the return trip will be. Now, of course, that makes sense if you're on a train. Let's be literal for a second. Of course, it's going to be cheaper to get back if you're going the wrong direction in a train or in a car or in a plane or anything. Sooner you can get going the right direction, the better it's going to be. But let's think about how that relates directly to retirement. So if your retirement plan isn't going the right direction, if you don't have the right target in mind, if you're not on the right track to get where you want to go, the sooner that you get off the track that you're on and get onto the track that will get you where you want to go, in this case, the less expensive the return trip will be, the less it's going to cost you. To put it into real terms, let's talk about your nest egg. If your nest egg right now is on the train that is completely exposed to risk, is that the wrong train for you at this point in your life? If it is, then you need to look at getting that on the right train that's still going to get you the growth or get you the income or get you whatever it is you need without having to worry about that next major market event or what everybody's saying is coming. This or that, it doesn't matter. Get off the wrong train and make sure you get on the right return train as soon as you can. Get on the right train as soon as you possibly can so you can get going the right direction for you. Now, again, not only just with your nest egg, we could be talking about an income plan. So some people say, well, I'm not going to be retiring for 5 or 10 years, so I don't need to talk to Tim yet. And that's fine. You don't have to. But the fact is, if you were to start an income plan, say at 60 and know you were going to turn it on at 70, we've got plans that will give you a guaranteed roll-up rate for those 10 years. Guaranteed. I can tell you right now at 60 years old what your payout would be 10 years from now at 70. I can tell you exactly what it's going to be because it's a guaranteed roll-up rate. We can make sure you are on the right track, that you're on the right train, that you're going squarely and directly towards what your goal is. That's what I wanted to talk about today. I want people to really think about where they are going. And I even wanted to take it one step further because in retirement, yes, is it important to make sure you don't lose your nest egg? Absolutely. Is it vitally important to make sure you've got enough income? You better believe it is. Is it important to make sure you've got a plan for long-term care? Doesn't mean you've got a long-term care coverage plan, but you've got some plan for long-term care, whatever that is. Is that important? You better believe it is. For a lot of people, is it important to make sure they're leaving a legacy? And however that is done, is that important? Absolutely. All of those things are vitally important, and all of those things are things I talk about in my book all the time. But there's other things that you need to think about in life, and especially when we get into retirement, that you need to make sure that you are staying on the right track socially. You need to make sure that you are still out there being with other people, being with your friends, being with your family, being with just the community and not just stuck inside, not being shut in all the time, just sitting there scrolling on your phone or scrolling on internet or any of that kind of stuff. You need to make sure you stay socially engaged, religiously engaged. Make sure you're spiritual, that you're not on the wrong path there too. I'm certainly not going to preach, but you need to make sure that you're on the right track there as well. Emotionally, socially, all of these different things all play together. And especially when you're in retirement, things kind of get magnified a little bit in retirement because now your health's a little more important. You need to make sure that you keep the stress levels down. You need to make sure that you are doing things to keep your health good. Don't just hope they're good. Get out. Make sure that you're still being active, whether that's going to the gym or that's just still doing the yard or that's walking the mall. It doesn't matter. Make sure you're active. Make sure you're still hanging out with your friends and still hanging out with your family and still hanging out with your church family. Make sure you are still active and make sure you stay active as long as you possibly can. Again, to make sure you are on the right track in every area of your life in retirement. So it's important to make sure that you stay on the right train track as far as your retirement income and your retirement savings goes. And just like this proverb says, if you're going the wrong way right now, the longer you wait, the more it's going to cost you. Whether that's in risk from a market event that could happen, whether that's in the growth that you miss out on an income plan because you know you're going to need income for this money at some point. Well, we can get you guaranteed income. That would have been missed out on. Or any of the other benefits based on whatever type of plan we get you into. We need to sit down and make sure that you right now are on the right track. And if you're not, that's fine. Let's get you off of that train. Let's get you turned on the track that will get you towards what your goal is as quickly as possible. Because again, the end of the proverb is, the longer that you wait to get off of that current train, the more expensive the return trip will be. Think about that as you go through this next week. Think about what kind of plans you have. Are you on the right track? Are you 100% sure you're on the right track? And it's the best track with the best train and the most security and the most growth and the most everything. If you're not sure, let's sit down and talk. Make sure if you are going the wrong direction that you can pivot as quickly as possible and get going the right direction now, right now. Don't wait. Let's make sure that the plan for you is right now, because again, the longer you wait, the more expensive that return trip's going to be. Well, I must take a short break. This is Tim Wood, and you're listening to the Safe Money Retirement Show. Let's pause for some exciting announcements.
How would you like to significantly increase your happiness in retirement? Study after study has shown that happiness in retirement is directly linked to how much guaranteed income is received each month, not how many assets are owned. Having assets in retirement only brings on more stress because assets can be lost due to a market event, medical situation, government policy change, or any other unforeseen disaster. And as we age, lowering stress levels becomes vitally important to our health. Safe Money Retirement clients have found that the secret to happiness in retirement is having enough guaranteed lifetime income to cover all their expenses now and for their golden years to come. Call us today to plan for your happiest outcome in retirement with real guaranteed lifetime income and not worrisome if-come. Our number is 800-913-SAFE. That's 800-913-7233. You can schedule a free consultation with Tim to review your income plan or request a free copy of Tim's book for more details. Call us toll-free right now at 800-913-SAFE. That's 800-913-7233. You're listening to the Safe Money Retirement Show with your host, Tim Wood.
Welcome back to the Safe Money Retirement Show. I'm Tim Wood, a Safe Money Retirement Specialist. In this week's case file, we are going to look at the story of Jim and Missy. Now, Jim and Missy were a really interesting couple. When they came in, they had one main concern, and that was that members of Jim's family and members of Missy's family both had people that needed long-term care. And it had completely, basically decimated both of their families' retirement plans. So they wanted to see what they could do. What was something that they could do? So obviously we sat down, went through the fact finder appointment as I do with everyone. And what we found was, because of their age and because they already had some health conditions, an actual long-term care coverage plan, an actual long-term care plan wasn't really feasible for them. It would have been, in most cases, actually, they couldn't even qualify, and the ones they could qualify for were just ridiculously expensive and were going to keep getting more expensive as they got older. So it wasn't really an option for them. But here's what happened. We actually looked at their entire situation, and we found where they were getting a majority of their income right now was what some of y'all have heard before, the 4% rule. They had a large amount, not quite seven figures, but close to it, saved up in retirement accounts, and they were just taking 4% out every year and hoping, obviously, to replace that with at least 4% growth and, kind of keep the norm. What we found was a couple of things. Number one, that 4% obviously is not guaranteed. If there's a major market event, as we've discussed over and over, you've got to have much more than what the loss was to recoup. So 30% loss, you need a 3% gain just to get back to zero. 50% loss, you need 100% gain, and it keeps going exponentially. So what you need to look at for them, what we looked at for them is, what could we do to get you away from the if-come thought process and get you to guaranteed income and get you into an income plan that now that income can double if y'all ever get in a long-term care situation? Because we can get you into that type of a plan with no medical pre-qualifications at all. So that's what we did for them. We basically moved and took the money that they were just taking 4% out. We moved that into a guaranteed income plan, actually a couple of them, but that doesn't really matter. Moved them into guaranteed income plans. And in those guaranteed income plans was a long-term care benefit that would double the income payment if either of them ever get in a long-term care situation. This is going to help them, first of all, know they don't ever have to run out of money, which that wasn't even anything they were coming in for. That's just a big benefit that they were very thankful for, but really allows them to have their income double if either of them ever get in a long-term care situation. And in most of these plans, it will double for up to 5 years as long as there's still money left in the principal. And of course, that's something we can discuss individually. Worked great for them. They left here as happy as they could be, knowing they would be covered if they ever got in a long-term care situation. Now, how can this work for you? Maybe you're in this same type of a situation. Maybe you're concerned about a long-term care event happening in you or your spouse's life and it costing you everything, because I've seen it. There's thousands of stories out there. My mother-in-law was a story. If you read in my book, I talk about my mother-in-law actually we had to sell off everything that she had. And by the time that was done, she actually wound up becoming a ward of the state for the last few years. So it happens all the time. So if that is a concern of yours, let's sit down, let's look at your overall picture, and let's see what a smart move would be for you. It might be a long-term care policy based on your age and based on your health. It might be. In many cases, it's not. In many cases, it's a growth plan that allows you access to all of that in a long-term care situation, or an income plan like the one we were just talking about that can double in a long-term care situation. There's also some other options that we can look at. We can look at a life insurance plan that is a permanent life insurance plan that's got a living benefit with a long-term care rider that allows you to access 2 and sometimes 3 times the death benefit in living benefits for long-term care. Again, but you have to qualify for it. That's why each thing is individual. You need to sit down with a certified financial fiduciary for yourself and come up with a plan for you. A plan that's going to work for you, whatever that is. So if you're concerned about long-term care, give us a call. Let's do a fact finder. Let's see where you're at. Let's see where your holes are in your plan. And let's make sure that we've got you in a plan that's not going to allow long-term care to completely derail your retirement. Well, I'm about out of time, and I would like to thank you for listening to the Safe Money Retirement Show. If you're serious about your financial future, give me a call, and together we'll get your retirement savings on the fast track to accumulate while reducing exposure to market loss. Thanks for listening, and until next time at the same time, I'm Tim Wood reminding you to stay safe so you can step into a secure future.
You've been listening to the Safe Money Retirement Show with your host, Tim Wood. Find out how to contractually guarantee that your income in retirement is guaranteed lifetime income and not if-come. Avoid any future market losses, plan for the potential of long-term care, and make wise planning choices so you can have the retirement that you deserve. Call us now for your free copy of Tim's best-selling book, Safe Money Retirement, Your Game Plan for Success. Our toll-free number is 800-913-SAFE. That's 800-913-7233. Or log on to our site at safemoneyretirement.com for more information or to request your free book. Thanks for joining us. We'll see you online at safemoneyretirement.com. The preceding information does not represent tax, legal, or investment advice. Obviously, by contacting us now, you are only taking the first step toward protecting your retirement. No information presented today should be acted upon without meeting with a qualified licensed insurance professional. It's important that you read all insurance contract disclosures carefully before making a purchase decision. Interest and other guarantees in annuity contracts are subject to the claims-paying ability of the insurance carrier that issued the contract. The tax consequences of annuity income should be considered with the help of a licensed tax professional. Rates and returns mentioned on this program may vary based on state availability and are subject to change without notice.